Hello, in this presentation we will generate reports including the profit and loss, balance sheet, and transaction report by date, then export those reports into Excel within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are in the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to generate financial statements, look at what we have so far for the month of operations that we have been entering, including the profit and loss balance sheet, look at the connection between those reports, and then look at a report that's going to be really important if we want to see the activity as we go. It's really good to see what has happened through a time period, and if we want to grade or compare things, then this transaction list by date is a great report to look at, so we will look at that as well. Let's go to reports on the left side, and we're going to select first the balance sheet. So we're going to say the balance sheet and select that item. Then we're going to change the date range to the month we are working in, 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. We'll then run that report. Here's what we have. Now, if we just go through this and just check it out quickly, we've seen it a few times before, but we want to look at its components, compare it to the other main report, being the profit and loss, the income statement type report, and then take a look at the transaction detail. So remember that the three main components are going to be the assets, and then the liabilities, and then of course the equity. We know we are in balance by total assets here, equaling total liabilities and equity. That's our accounting equation, assets equal liabilities plus equity. Another way to put that is that the asset side represents what the company owns or has claim to. This is what the company has. And of course, the company being a company, thinking of it as a third thing, an entity in and of itself, whether it be a sole proprietor or a corporation, we know that whatever it has, it owes to somebody. Somebody has claim to those assets. In other words, either a third party in the case of liabilities or the owner in the case of the equity. So the other side of the accounting equation, the bottom number here, liabilities and equity, represent who has claim to the what of assets that the company owns. So this is the balance sheet, the one way we can look at the balance sheet. Note that we then have these subcategories within the balance sheet. If we were to minimize these within the form here, it's pretty nice that you can see components. So the main components are just the accounting equation. Assets equal liabilities plus equity. All I did was hit this little triangle and take that down to its minimalist parts. So if we want a very minimalist financial statement here, we could say this is basically what the company has. This is what they owe it to. That's kind of like the most overview you can get. Then within assets, we have the current assets. Those are going to be due within a short period of time, including the checking account, and then the accounts receivable, what is owed to us, which has its own subcategory within QuickBooks here. Then we have the other current assets, those things that are going to be convertible or used in a short period of time, generally a year, inventory, prepaid insurance, short-term investments, and this undeposited funds, in essence a form of cash account, an account that might belong better up here once we group them together, but we expect to deposit these shortly, so that will be okay. Then we got the fixed assets that we will break out separately because they're going to be longer lived assets. That's the $98,000. We don't have any accumulated depreciation related to that yet. And then we have the liabilities broken out between current and long term. Once again, the current liabilities are due within a year. We want to match those up to the current assets, which are things that will be consumed within a year, to see if we can pay off those current liabilities with our current assets. So we have nothing in accounts payable at the moment. We do have a Visa card that's a current asset. And then we have other current assets. We owe the State Board of Equalization for sales tax that we've been collecting. Payroll taxes payable that for processing our payroll, both the employee and employer portion. Then we have the long-term liability for a loan that we took out. We're assuming all of it is due after a year's time period, and we might have to make an adjustment for that at the end of our adjusting process, which we'll do actually next month. And then we've got the equity section. And remember that we zeroed out opening balance equity. It's not really an account that typically will be used. It's more like a plug account QuickBooks uses when setting up accounts and not knowing where to put something. If QuickBooks doesn't know where to put it, it might be going to opening balance equity. So that's where we want to check out anything in that area and adjust it. We have the owner's investments. That's what the owner put in terms of money from the owner to the company, as opposed to retained earnings. Retained earnings being the amount that has accumulated over time in terms of earnings generally. And of course, this isn't the earnings for just this time period. This includes our beginning balances that we put into place. So although this is the first month of operations within QuickBooks, it's not necessarily the first month of operations for the business. We set up the business and put in opening balances and clearly had transactions before this time contributing to the retained earnings. Then we have the net income. Note this is something not typically on the balance sheet, but QuickBooks puts it on there because it helps us really to tie out what we're looking at here into the profit and loss statement. So that means that total equity, what is owed to the owner, is $144,174, and that represents the investments from the owner and then the earnings of the owner, which are really these two. And this is actually a net loss, even though it says net income, because it's a negative and we lost money. So that's going to be a recap of the balance sheet for the month. We're going to go ahead and print this report and export it, I should say, to Excel. So I'm going to export to Excel. Here it is. I'm going to open that up and see what we have. Here it is. I enabled the editing and we have the report. Looks good on formatting. The printing preview looks like it's going to print. I'm going to select print preview down here, print layout. And it looks like it prints as we would like it to, all on a page there. It's 2 pages long. We could make it fit on 1 page, but I'm more concerned when it's more than 1 page wide. So I'm going to keep it like that for now and just go ahead and save this. So we're going to say File, Save As, Browse to where we want it on the computer. Once we found the location, we could change the name. I'm going to go ahead and just keep the name as the default, which is the name of the business and then the balance sheet, and save that information. We're going to close this out then. Go back to our reports. We want to select another report now, that of the profit and loss. Now, as we select the profit and loss, we know that they're linked because this $6,221 should be in the profit and loss. Remember, however, when doing this, we got to make sure that we have the correct time period. So when we do the balance sheet, typically it's a point in time, not a time period. But when we put in the income statement here, we're selecting something that has a time period, a beginning and an end. It's not something like cash, which is what it is at a certain point in time. This must be net income for a month or a year. So when you compare this to the profit and loss, we got to make sure that we are looking at the same time period. In this case, the month of January 2021. So now let's go back to the reports on the left side. We're going to select our profit and loss, our income statement type reports. We'll type in profit and loss and select profit and loss. We're going to change the dates to 01/01/212, 01/31/21, January 1st, 2021 to January 31st, 2021. Running that report, we then have this information. Let's just recap this real quick. We note that the bottom line number is that 622,193. That's what we found on the balance sheet. So they are connected. They are related. This will be part of the equity section. This is really detail about the equity section, about the earnings over time, or in this case, the loss over time. So what we have first here is we've got the sales of products. These are inventory items we sold, as opposed to service items that we sold, and we broke those out into 2 separate accounts. That's going to be our total income, sometimes called revenue. We're going to call it income, same thing. Cost of goods sold, that's the cost of the inventory we had to consume in order to generate revenue. That's mainly connected to this revenue up here, the revenue related to selling inventory. This number is so important as an expense that we typically break it out in its own area. When we sell inventory, cost of goods sold is hugely important. If we don't have inventory, cost of goods sold is not there. So this will give us a subcategory of total income minus cost of goods sold gives us the gross profit. That's our profit before all other expenses. And then we have all other expenses: office, payroll, telephone, utilities. Notice that when we set these up, I put payroll expense on some of these and no expense on some of the others, such as utilities. You may want to standardize that and have an expense in there on all of the accounts or none of the accounts. Some accounts, they just typically roll off the tongue as payroll expense, and possibly you'd want to put expense in the writing as opposed to payroll liabilities, which would be on the balance sheet. Some people would like to be consistent and have that go through all the way through, like utilities expense to have it all the way through. So you might want to think about that. That's really just something that goes into the bookkeeper's preferences. And so some people will always want to have an expense. Some people will never want to have an expense. And some people might put in a system such as, well, if utilities is the only utilities and it's a utilities expense, meaning there's no prepaid utilities or no utilities liability or utilities payable, then it's not very confusing. It's just an expense and I don't need one. Or as opposed to payroll expense, which has a payroll liability account as well. So if we just put payroll, it might be confusing. So think up, there's a lot of flexibility on the profit and loss in terms of how you're going to group these things. So then we have the total expenses here, and then we have the gross profit minus the rest of the expenses, in this case giving us a loss. Not uncommon for the first month of operation or for a fairly new business. So we'll have the loss here. That was then part of the balance sheet. We're going to go ahead and then print this out, or export it. We're going to export this once again. So we're going to select export and export to Excel. We're going to close this. We'll enable the editing, and there it is. So it all looks like it fits on one page. So we're just going to go ahead and save this information. So we're going to go to the File tab. We're going to go to Save As. We're going to go browse to the computer where we would like to save it. And then we could change the name. I'm going to keep the name we have here, which is the name of the business, followed by the profit and loss, and save the report. So that's going to be the profit and loss. We're going to close this back out. Those are our two main financial statement reports that we go to oftentimes, or go-to reports. And now we're going to look at the report that's really a good detailed report, and that's going to be the transaction list by date. So to get to that report, we're going to go over to the reports on the left. Also note, however, before we do that, that the general ledger is also a really good place to go, and that's something we work with a lot in our normal accounting courses if we're taking accounting courses. And really, we could run a general ledger and get all the general ledger for all reports, which is often asked for in terms of an audit. But the transaction detail, if we select on these items, will give us something similar to, it's called a transaction report in QuickBooks. This, in essence, is the GL activity, the general ledger for each account. So if we wanted to go through the GL individually by account, we can do that and go through to these accounts. If we want to see all the transactions that have happened over a time period over any account, that's when the transaction detail list by date will be helpful. So let's do that. We're going to go to the reports on the left side. We're going to type in here the transaction list by date. So here it is, the transaction list by date. That's the one we want. So we'll select that. And then we'll change the dates from 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. We'll run that report, and here is that report. So we have the dates on the left side. We're going to have the types of transactions, and this is what's great about this report. It gives us all the transactions we have. Great for taking a look at what has happened over a month. Also great if we're comparing what we have done to someone else, such as in grading. So this is a good one if we're doing this problem, if we're working through this problem. If our balance sheet and our profit and loss haven't tied out exactly to what they should, then take a look at this report, tick and tie off everything here to there, to what I have to you have, and that should be the difference. Now, if something is on this report, and not your report, and you're checking off and working the same problem, possibly it is a date issue, meaning it's very possible you didn't put everything in there as of 2021. So just change this beginning date to the current date or before the current date, and then run this report again and see if you see any outliers, see if you see any dates. So I'll do that right now. We'll say run this report, and we'll just say the current year is 2016, just to go way back in time and see if we just put a date that was way out of whack. Then if we go through here, we could see that, okay, we see detail for 2020, and we ran the report for 2021. And that makes sense because 2020, we had entered data before the month in which we started operations. We did that in the last section and ran a detailed report for that. And then we've got the 2021, so that looks good. And there's nothing other than that here. If there is something other than that, you say, this was a wrong date. This date's in there as of a way earlier date. It needs to be changed. You could select it. Say if this item is in a random date, we could select it and then change the date. You want to be very careful when changing the dates in practice, however, because it can really throw off your beginning balances and your reports from month to month. But QuickBooks gives you the ability to do that, and if you do any date changing with care, it's possible that that could be very useful. But it's also not the best way to deal with the audit trail in a normal business as well. You should actually do another journal entry to fix that so you can see the mistake and see the correction from an audit trail. So we're going to close that back out. So that's how we can fix this, however, when we go through here. So I'm going to change this back. I'm going to go from 010121 0101 2021. Now we'll go ahead and run this report once again, and we'll have our dates back to January 1st, 2021 through the 31st. Now this will have the date, it's going to have the transaction type, which is really important. That'll tell us if it's a journal entry, a check, or a deposit. So this is really useful information when checking this stuff off. Then we'll have the number, the posting, the name if there is one, the memo description if we have one. We'll have the account and the split account, the two accounts that will be impacted by the transaction, and then we'll have the amounts. Now it is possible for the amounts to be out of date. We're in ordering by the dates over here, but it is possible if they're on the same dates for the amounts to be out of order. What you want to do is check off everything to just tick and tie it off. Just check it off here and then check it off on your report and just tie everything out. If everything here matches what you have and the beginning balances were right, meaning we have the same beginning balances at the end of the first section when we entered the beginning balances, then this has to work. It basically has to tie out. So if we check everything off, we just go through all this if we've been working through the problem and just check all of these off from this report to your report and see that they are all there. And if they are not all there, we can add them or make sure to check the dates before we add them and make any date adjustments that need to be made. Once we do that, then the two reports should tie out. We should be able to go to both these reports and tie them out. So you want to go through this whole thing and just basically check off these numbers from this report to your report. And so we'll just go through that entire thing. And then you also could check these items over here in terms of the transaction type and make sure that you have all the transaction types that are in here by date. Going through each date, checking off that you have the same transaction types in each of the dates. And if that is the case and the amounts are matching out, then we should be okay and everything should tie out. Your balance sheet and your income statement should tie out. So let's go ahead and print this report and export it to Excel. So in order to do that, we're going to go up top. We're going to go to the Export to Excel. Here is our report. I'm going to close this. We'll enable editing. Now this one typically won't always fit on one page. Let's see if it does here. I'm going to go to this second tab, which is the page layout, and see if it fits on a page, and it doesn't. If we go back to the first tab, the normal, then it usually puts this little dotted line on where the breaks will be. It's also not, we can't see all the numbers over here, so we could make this larger. I'm going to put my cursor right between the J and the K, make that a little larger so we can see those items. Then we can go through and try to format this information. So first thing, we could go to landscape rather than portrait. So to do that, we'll go to the page layout. We will go to the page setup, orientation, select orientation, landscape. So we can have that. That'll help us out just a bit. And the next thing we can do is start adjusting the columns or maybe deleting columns that are not needed. We might want to go through that process and delete columns. It's a little difficult to delete columns because they merged these top cells, meaning rather than having a bunch of cells, A, B, C, D. It's all A1. This whole thing is A1. So that makes it a little hard to delete the cells sometimes. But I'm going to go ahead and do the next thing we could do, which is go to the Files and go to the Print. And within the printing options, we have the scaling option at the bottom here. I'm going to make this a little larger so you can see it because there's a drop down. If you go to the scaling option, what we want is to fit not really on one page, because I don't mind if it's 2 pages long. I mind if it's 2 pages wide. So what we want to do is fit all columns to 1 page wide, all columns to 1 page. So we'll select this item, and that will kind of force it to work. That'll put all the columns on 1 page. It does happen to be still 1 page long as well here, but that's just out of coincidence. The thing we want to have happened is not to have a cut here and another page. I'm okay if there was a cut here and another page, but not if there's a cut here and another page, because that makes it messy. So now it's all on 1 page. We had to kind of force it. You want to do that as a last resort. If there's any other way we could delete columns or anything like that, that would be better, because it doesn't change the size of the text, especially if you have multiple reports that you will be printing. Then you're going to have reports with all these different text sizes on them if you have to use that function, and you'd rather adjust the columns and whatnot in order to make it work rather than adjusting the size of the font. But if sometimes you got to do what you got to do. So we're going to go ahead and save that. So then we're going to go to File tab, and we're going to say Save As, and then we're going to go to Browse and locate where we want to put that on the computer. Once we find the location, we could change the name once again, but I'm just going to keep the default name and save that information. So those are going to be the main reports that we will have. Again, this report's really the one you want to check off. If there's any problems with the balance sheet or the profit and loss, this is the one to check off. Check everything off that is there. Go into it and drill down on it for any problems. Check the date ranges on it. Once this is set up correctly, then everything should be working on the profit and loss as well as the balance sheet.